Hey there, this is Benga Olatunji, your mentor. So today I want us to look at one of the common trading strategy that people try to use in trading the forex market and the global financial market. As we know, there are different strategies out there, and this strategy that I want to discuss today is one of the most common one, but there are still different approaches to it. For example, now um, people commonly use trading divergence with indicators. I mean, it is indicators that actually give an hint to those set of traders what to do and what not to do, whether to take a buy or to take a sell. So they use different indicators. Some use MACD, RSI, different moving averages. So there's a way they tweak the settings, to provide them with the hint along the line. So, but we as price action traders, pure price action traders, I mean, we do not rely on indicators to tell us when to take a decision as regard trading, right? So we look at price, we purely analyze price. So our approach to this trading divergence is a bit different from theirs. Though at the end of the day, the goal is the same thing. It's just to probably use this strategy as your basis of analysis, or you use it as a confluence to your major way of analyzing the market. For example, for me now, I do not majorly rely on the divergence as a strategy. It is just like additional confluence. It's going to give me another confluence or another reason why I want to take that decision, whether I want to buy or I want to sell. So let's go right into it. One would say trading divergence. Majorly, what we consider is we look at pairs that are correlated. You must have been hearing of correlated pairs. So when we say correlation, we have positively correlated pairs and negatively correlated pairs. But our focus is not on correlation for this particular lesson. So, but when you're saying positively correlated pairs, it means when one is buying, the other is also going to be buying. And if it is negatively correlated, when one is buying, the other will be selling, or when one is selling, the other will be buying. So that's negative correlation. So let's focus on what we have for the sole purpose of this lesson. So we said we want to be talking about trading divergence. So let me pick a popular correlated pair. When you look at Euro USD and GBP USD, you're going to discover that their movement is alike, even though Euro represents like the currency spent by most European countries, some of those European countries, while GBP is a currency for the Great Britain, right? So, but at the same time, they share similarities in terms of the way they print price on the chart. If you have been following very well, you discover that when Euro is buying, GBP USD might be buying at that time. But as a trader, it will not be ideal. It is possible, it is okay, but it will not be ideal for you to trade both at the same time. You are buying Euro USD, and then it is better for you to buy GBP USD actually. But you cannot say you are buying Euro USD and you are selling GBP USD. It doesn't work that way. Okay, it is better even if you are seeing buys on Euro USD and seeing sales on GBP USD, you can actually stay out of the market. But then, how do we now apply this trading divergence um, in terms of those two correlated pairs? They are not just the only one. Sometimes I use it for GBP JPY and Euro JPY. Sometimes AUD USD NZD USD. Sometimes GBP card and Euro card. So those pairs that moves alike like that. So now I'm going to give us a chart. So this is a typical selling chart. This market is moving in a downtrend, as you can see. But at a point, we had a change. Let's say this is for Euro USD. Let's say Euro USD. So this is Euro USD chart. Okay. Then let's have another one here. Another one here. So this is another chart. Now, when you look at those two, let's say this one now. So let's call this GBP USD. GBP USD. So if you look at both, you discover that initially they were both selling, right? We're seeing sell, downward movement. So we had this high and this low. We created a lower high, lower low, lower high, lower low, lower high, lower low. We still had another lower low, and you know we should be expecting a lower high, but it got broken here, which means the market has changed here. Let's say we now created this, then we start moving up. You can see that there is a change in the market, right? Now let's look at GBP USD too. We had this high, this low created a lower high, lower low created another lower high, lower low created another lower high. But instead of creating a lower low, we had higher low, right? And that higher low led to the break of this, which indicate that this also has switched to a buying market now. That is, we are now trying to print an uptrend market, if you are following. So we are now trying to print an uptrend market. Let's see. So let me delete this. So this is an uptrend. Look at these two, we're selling, but now after the break of this last lower high that we created, it means we're switching to a bullish momentum. For this one too, after breaking this last lower high, it means we're switching to a bullish momentum. But you can notice a difference in the two. Now look at this. These two right here, and then these two right here. Even though we all agree that yes, both were selling initially, and now both broke the last lower high to create a bullish momentum, you can see something that there is a difference between how both printed their price action. We were having similarities before, lower high, lower lows, lower high, lower lows. But when we got here, you discover that this now for Euro USD, we had a lower low created, and it was that lower low that led to the break of this lower high, right? But for this one, we had a higher low, rather, not a lower low again. We had higher low that led to the break of the lower high. Okay, this one, lower low, broke the lower high, right? But for this one, it was higher low that broke the lower high. It was the higher low that broke the lower high. So even though they are similar in the sense that we're selling initially and we change to buy, we're selling initially and we change to buy, there's still something different between the two. This is where we cite a divergence. This is what we understand as divergence as a pure price action trader. You can see that we are basically studying price, what price is printing. We're not looking at any indicator. So what is the interpretation of this? This is interpreting to us that euro was still very weak before it eventually tried to break this US dollar. You know, we were selling and selling. Both of them were weak, right? But one is stronger than the other. And if you want to buy, remember what I said earlier, that it is not too ideal for you to take trades on both at the same time. It is better for you to pick the stronger one and it is going to assure you that you are going to get to your TP faster than the other one. Okay, now the fact that this one sold and still, sold below this low, created a new lower low, it is telling me that it is still very weak compared to this one. After this move, it didn't create a lower low, instead it created an higher low. It is telling us that it has the strength, right? It is showing a stronger, giving a stronger indication compared to its hero counterpart, and it broke this last lower high. This last lower high created here. So it is telling you that GBP USD, GBP is stronger than euro. And when you are now comparing both against USD, GBP USD is showing better strength compared to euro USD. So, and if I want to take a buy decision on both, I know that this one also will come down and take a buy. At the same time, GBP USD will come down and take a buy. But because of the divergence that I've noticed here, you can see we had a lower low, but this one had higher low. This divergence, these two that you are citing here, and this one is already showing to you that yes, GBP USD is the better pair to take a buy decision on. That is not to say you cannot buy Euro USD, but you have to be smart as a price action trader. So when you are very sure that this one is going to give you a return in a faster than the other one, you should definitely go for this, and you not have to be waiting and waiting. So what happened is, while this is moving and this is moving, this will tend to be slower compared to this one, because when you look at it, their divergence, it is showing that GBP USD is stronger than Euro USD. I hope we understand this. So that is for the buy scenario. We can quickly look at the same thing for a sell scenario. Okay, so let's try to look at that as well. Let's say we have the market was buying, it has been buying and buying, then suddenly this change, and then we start selling. This is for Euro USD, right? So let's say this is for Euro USD, and then for GBP USD, we're also buying. We're buying and buying. Then we created a sell. We started selling. We started selling. We started selling. All right. Now, even though there are similarities in the sense that this market was buying, we can all agree, before it later switched to sell. This one also, it was initial buying before it switched to sell. But if I want to take a sell decision, remember that if you want to sell now, we have these two. I can basically mark my resistance zone inside of here, right? And also for this one, I can also mark my resistance zone from here. But we need to study what is happening with both. So let me change this to another color. So we need to understand that something happened here. Look at this. And then have a look at this. This was at a point that both were inside the resistance. Now look at what happened. We were having this, we had a low, a high, this low, higher low created higher low created higher high, right? This higher low, it created another higher high, and we're expecting this higher low at the same time to create another higher high, but it didn't happen. Instead, we created a lower high. When we created this lower high led to creation of a lower low, and we broke this, which indicate that we have switched from the bullish to bearish. When you are buying, lower, higher high, higher low, higher high, higher low, higher high, and when you're selling, you say lower high, lower low. So we've had a lower high and a lower low established. Now when you look at this as well, we had this high, this low, this high, this low that led to a new higher high to be formed. another higher low that led to another higher high to be formed, another higher low that led to another higher high to be formed, right? But this higher high now, instead of leading to another higher low, we broke this and then we created a lower low. But there is a difference between the way they sold. When you look at Euro USD and GBP USD, there's a difference between the way they change. That is where divergence, that's where the divergence happened. Okay, that is when you notice the divergence. And if you are going to now pick the better pair to sell now, you should now be able to interpret what happened. What this is telling us is, for the fact that Euro USD could not create a new higher high for the last time before it sold, it means it is weaker. Euro is weak, which means it is better for us to sell Euro USD than GBP USD. Let's look at what happened with GBP USD. GBP still showed strength and still broke this high to create a new high. It is telling us that it is still very strong before it started selling. But before this one started selling, it has shown that it grew weaker before it sold. That was why we didn't create a new high. Instead, we created a lower high and a lower low straight up. But it was higher high that led to the creation of a lower low here. So you can see that there is a divergence. So when you are trading divergence, if you want to sell, you are going to have to sell the weaker pair. Okay, and when you want to buy, you are going to have to buy the stronger pair. So in this instance now, it is Euro USD that I'm going to trade. Look, based on their divergence, looking at the fact that this one is not strong and it couldn't create a new high, whereas this one still shows strength when it was approaching the resistance zone by creating a new high. So I would rather sell Euro USD than sell GBP USD, because GBP USD is going to be displaying a very slow movement to sell, whereas Euro USD, it has already shown that it is weak and it will be selling faster. So that is how you approach trading divergence as a price action trader. You don't need any indicator to tell you whether or not you should take a buy or a sell on a particular trade. So you can backtest this, look at your chart, try to analyze based on this, especially if you are someone that trades correlated pairs a lot. So this is applicable to all pairs that are correlated. Okay, so I believe with this you've been able to understand trading divergence more than when you start watching this video. So see you again in the next video. Thank you.